All right, folks. Well, my next guest wonders why so many on Wall Street are surprised by the latest warning signals and ask, why don't they just listen to conference calls? I would also add, why don't they just listen to this show as well? But let's bring in Wellington-Altus Private Wealth Chief Market Strategist Jim Thorne. Hey, Jim, glad to have you with us. So we've got your note, right, and your July. This is your July note going back to July 2nd. So you were saying July insights, navigating the dual revolution. One of the things that you talked about is the coming fiscal storm. So you talked about this a month ago, and it seems to be like breaking news on Wall Street right now. What's going on?
We're allowed to talk about things, quite frankly, at Wellington. I think it's our clients like that, and we try to take a non-consensus view. So, Charles, nobody should be surprised about what's going on. The Fed is significantly behind the curve. They should be cutting at least 150 basis points right now. We know monetary policy works with a lag. And I think you're absolutely right. I think the market is coming to terms with the fact that with fiscal deficits at 7% and debt to GDP at 125%, what do the politicians, let's try to keep it agnostic, but if politicians really don't understand the severity of the situation, then it really comes down to a question of, do we get a credit crisis before we get a growth scare? And we would suggest that it's really going to be very interesting to see how the new president and the cabinet deals with it. Right. And right now, Charles, we're really not hearing anything comforting on the political stage that suggests that either, and I'm trying to be objective, either candidate, Mr. Trump or Ms. Harris, is willing to basically attack head on the fiscal problem that's in the room. And that is the most concerning thing that I suggest.
Yeah, it's 150 basis points. Now, Jeremy Siegel was out with 75 basis points, and a lot of folks on the street kind of brushed them off. I want to make sure we've got that out there. 150 basis point cut you would like to see right now.
I think, well, the 2-year is 150 basis points below where the Fed funds rate is. We need to get the yield curve steep again. And then once we get it steep, we need it to sit there to allow the effects of the positive monetary shock to work through the system. They should have been cutting already. So Mr. Siegel says 75 today and then 75 in September. Sure, we've got to get the rates normalized. And it's unfortunate that the economists at the Fed and on Wall Street are ignoring the elephant in the room. And look, you talked about and I'll say this to you, Charles, we have known each other for decades. This reminds me of 1997 when Hong Kong blew up. They attacked the peg. And then 16 months later, we had the long-term capital management crisis in Wall Street that almost took out the 6th or 5 largest prime brokers. This is the beginning. The risk that your viewers should take is this: if nothing changes in respect to how governments view the deficit situation and how Powell and the Fed that are completely and totally disconnect, if they don't change, then you've got to put financial crisis on your bingo card. And that is something that we need to be honest about. Right. And I really wish that the conversation would be more frank and honest about the massive mistakes that the Federal Reserve is making right now.
I've got less than a minute to go. If we're being honest and frank, I don't think anyone on Wall Street who have the power to pull the levers are going to take your advice. So then what happens next?
Well, I think we really have to evaluate what the cabinet does, the new cabinet does in the spring of 2025. Look, it's way too early for a growth scare. We've got too much fiscal stimulus in the economy. That's a back half 25 story. I still like AI. I still like technology. Look, Charles, for your viewers, put the 40-week exponential moving average up on your screen. They've taken everything back to it. Sure, the S&P 5,000 could be a target, but it's orderly And this is the shot across the bow that should get everybody's attention. And the big crisis comes to in the back half of 25.
Yeah, I love in your report where you say that the AI story is not being overhyped, it's being underhyped. So you give us a roadblock, you're giving us a roadmap. Ride the AI wave, but back half of next year, if something isn't done, Katie bar the door. Jim, thank you very much. Always appreciate it.
Thanks, Charles.